Hi there. So markets are kind of volatile again today, a little bit calmer than they were yesterday. Today we got the JOLTS data, which we're going to go over now as well, which is certainly having an impact on the market overall. We can see that we got a little bit of a surge in the S&P when that data came out, and that's because when we look at the JOLTS data, it was a little bit weaker than expected, coming in at 7.6 million. That was down from an initial take last month of 8 million. However, the number last month was revised higher to 8.156 million. So this number was a disappointment, at least on the surface. Again, this data is really subject to really big revisions, so it wouldn't be surprising to me to see it get revised higher. And one reason why I'm thinking it might get revised higher is because if you look at the Indeed data, that tends to be a pretty good leading indicator to where the JOLTS is going. And you can see that we bottomed here in October and we've certainly moved up. So maybe again this ends up getting revised higher when we get to next month, but we'll have to just kind of wait and see. I don't really think this is a horrible number overall. When we look at the quits rate, that's also interesting because that really stayed unchanged at 2%, no change there. So that's a positive. That's another sign that the market's doing fairly well. You can actually see there was a minor uptick in the number of people losing and the number of people quitting jobs, and it looks like again, if you sort of look at this, this is a higher low than this one. So, maybe people are feeling a little bit better about the economy and they're going out looking for new jobs. Certainly it's not unusual to see that at the beginning of the year. When we look at total separations, people getting let go, you can see that was up just a little bit. But again, when you look at it on a seasonally adjusted rate of change, not really changing very much. So it's been kind of stagnant at 3.3% now since August. So not really much to report there. And when we look at hires, this number also did increase a little bit in December. So again, the job market doesn't look like it's deteriorating here. It seems like it's pretty steady. And, my guess would be is that this number, as a number of job openings come down, you certainly run the risk that, the unemployment rate could rise. But again, the fact that there are people quitting kind of suggests that maybe, things are okay out there. They're not really deteriorating, and it seems like the labor market is fairly steady. And I think that's really the key here. The equity market's responding positively to it because the number missed. And at least when you look at it on the surface and you look at, Fed fund futures for the month of December, they're trading down just a little bit. But again, we've been in the same range for really a long time. 3.9%, this 3.9 to 4% range on the Fed fund futures is pretty much where we've been. When you look at the effective funds rate and you subtract the July contract, you can see the market priced out a rate cut in July, and it looks like we're really leaning more towards the next rate cut not occurring until September. Basically, I think at the end of the day, we're talking about a Fed that probably doesn't have much room to cut, if they have room to cut at all. The 10-year rate has been fairly stagnant and steady in this 4.5% area. Again, this is sort of the key level, and it really hasn't changed very much. As long as we hold 4.5%, I think the more the likelihood is that we're going to continue to see rates move higher. Yesterday, Raphael Bostic was out, and he was talking about where he sees a neutral rate, and he was talking about a neutral rate somewhere between 3 and 3.5%. And if we just take the EFFR, which is the effective funds rate, which is at 4.3%, and then you take the 10-year rate and you subtract that, what you get is this sort of look that shows you what the historical norms are when it comes to where this rate tends to bottom and peak. And what this is showing us really is that right now, the market right now is only at 21 basis points on the 10-year rate minus the effective funds rate. And so if the neutral rate of the economy is somewhere between 3 and 3.5, and we typically see, the 10-year, top out somewhere around 370 to 400 basis points higher than where the effective funds rate is, or even if it were to top out at, 150 basis points, and so if you kind of think about what that means, if the 10-year rate peaks out at around 150 basis points higher, what that kind of implies is that if the neutral rate is 3%, you add on 150 basis points, that's 4.5%. If the neutral rate is 3.5%, you add on 150 basis points, that's 5%. If the neutral rate is 3% and we end up seeing the 10-year top at around 2.5%, you're talking about a rate at 5.5 to 6. And so that's why, again, I think that you're going to probably continue to see further bear steepening in the market. I think it's just the market's going to take time to figure out where this neutral rate on the economy is going to be. And of course, with the Fed, now with the tariffs being put into play, it really calls into question, what the impacts will be. I mean, certainly when you look at things like inflation expectations, you can use the RINF to do that, which is an ETF. Basically, you can see inflation expectations have really just moved right back up to the upper end of that trading range that we've been in now for some time. And we're getting rather close to potentially even breaking out. And if that were to happen, I would really think that you would begin to see the back of the curve begin to rise as rates at the front of the curve begin to move, as rates at the front of the curve kind of stabilize. And I think, again, a lot of this comes down to, where oil prices are going. Obviously seen a fairly big pullback over the last couple of days and weeks. We're still kind of holding the 61.8% retracement level. That's been a really key level for oil, you can see now for some time. And again, what this is sort of pointing out to me is that oil right now has some support here, and that maybe we've come out of this long period of consolidation that we've had in this 65 to 70 range, and now we're looking to start base building and moving higher. And you're really seeing similar types of thing in gasoline, which have also found some support at the top of what had been the previous high at this 205 level. So we're going to want to keep an eye on this to see if this continues to move higher. I mean, one would think that if you're going to see gasoline move higher, you're going to also see inflation expectations beginning to move higher over time as well. And you can see how they're correlated to some degree, and I'm sure if you put in gasoline at oil prices, it looks a little bit closer still, and you can certainly see that relationship is there. And so I would keep an eye on oil, because if oil prices start going higher, then I would think inflation expectations start going higher. And if inflation expectations start going higher, my guess would be is that you're going to see 10-year rates begin to go higher as well. So that's why I think the big risk to this market continues to be, bear steepening. And when you look at the S&P 500 overall, when we take just a look at the daily view, there's really not much going on here. We've really just been chopping sideways now since, call it, November 8th. And, the range has been somewhere between, call it 5780 and 6100, and that really has been it. And when you look at the futures, they look a little bit different, although not that much different. You can certainly make a case that maybe there's a head and shoulders still forming in here, with your neckline being down here around 58.25. But there's nothing really going on in the futures market at this point that gives us one indication or another in terms of where this market is going to go overall. When you look at small caps really haven't done any better, and the RSP equal weight has certainly rebounded off of this low, but you can see that we had a failed breakout attempt just on Thursday, where the RSP, which is the equal weight, tried to break out and move up above the 61.8% retracement level, and to this point it's failed. Now it's found some support, but the bigger question is really, what is going to be, the main leader here? Because, it seems like NVIDIA has fallen off a little bit. The semis have certainly lost some juice. Here you had a breakout attempt that appeared to fail with that massive gap down. Right now you're holding and struggling to hold the lower end of the trading range on the SMH. So again, when you look at equities, they look kind of blah. They don't really look like they have much going on for them at this point. And I think if you look at rates, I think that's really where the action's going to be, because I think that's really where all the risk is at the moment. And when you look at the dollar has also been sort of range bound again between this 107 and a quarter to 110 area. And when you look at the euro, the euro bounced right off of 102 yesterday. And so that's also an important level, because that's also a 61.8% retracement level of this move. And so euro's at a key level, and you have the US dollar, Japanese yen, which doesn't really seem to be giving us much either. Even though the BOJ raised rates and is signaling for more, you can see the market's really not believing it, because markets are, it's just trading sideways. And so that's really all that we have at this point. I mean, I was sick for a week, so I apologize for not posting during that time, but I really had no voice, and as I'm sure you can hear today, I still don't really have much of a voice. But I know some of you were getting a little antsy and getting worried that we weren't going to be posting more videos out here for free, and certainly that's not the case. It's just that I was sick, and it's just beginning of year stuff I'm also going through from a business perspective, that I need to reevaluate everything that's happening. So anyway, hope you remember to subscribe to this channel, like this video, please share it with your friends, please help me grow the channel so I can continue to bring you more content and information and be a reliable source for you. Anyway, have a great day. Bye.